afternoon, everyone, and happy Monday. You have Alyssa Coram and Justin Nielsen here with a look at the stock market today. We're going to analyze the mixed session that we had on Wall Street, but Justin, still a lot of strength underneath the surface. We're going to take a look at three standouts from today.
Yeah, so we'll go ahead and stick with retails and metals. So retails, we'll talk about Kohls, department store, also Foot Locker in the retail apparel. And for the metals, we're going to get away from steel this time, although there was strength there as well. And we'll talk about uranium using an ETF, URAN.
Perfect. Great. All right, first, let's take a look at the major indexes. The NASDAQ finished today down about 0.5%, while the Dow was up 0.7%, leading the session. The S&P 500 up about 0.3%, and the Russell 2000 up about 0.5%. So we did see maybe a little bit of weakness in tech, but the NASDAQ is still holding for now above the 21-day line.
Yeah, and really, this is about a lot of these big tech names. They are still in the S&P 500, but there was a lot of strength in energy and retail and metals and the materials and these places where the NASDAQ composite just doesn't have the exposure. And so when that happens, you can get the S&P 500 and the Dow Jones Industrial Average looking much stronger. The NASDAQ, it's not like it's a disaster here. I mean, this is just sideways action. One of the things we were talking about on IBD Live today was the fact that if you go to the weekly chart on the NASDAQ, I mean, this just looks like tight weekly closes that we've had here for a few weeks, and that's usually a good thing. It allows for more setups, and that's kind of what we're seeing. We're seeing tech just take a little bit of a break here. It's a little bit harder for some of those names to make progress. We're seeing more breakout failures, but there is still strength in these other areas. Again, energy and materials have been two areas that have been particularly strong since the November election, the presidential election, and they were just reasserting their strength today.
And here we have the S&P 500 showing that, and we have it still right around that 4,200 mark, close slightly below that level today. But the S&P really holding this 10-day moving average for quite a while, which is pretty impressive.
Right. Whereas the NASDAQ composite is looking like it's going to be, coming down and testing its 21-day moving average line. The S&P 500 is holding that 10-day. And, if you just look at the weekly chart of the S&P 500, whereas the NASDAQ was really, it's forming that tight action right around the same level that it was at back on its February 16th highs. The S&P 500, meanwhile, just really kind of shot up. And so it's showing some fairly tight action up here as well, but it's after a strong move. So the question is this going to be one of those areas where some of these areas of strength are going to start topping out and maybe taking a break, or is this just a little bit of a breather before they continue on with their moves?
And let's also check in on small caps, looking at the IWM ETF, pulling back around these moving averages, which really appear to be converging at this point.
Right. So it's getting a support in a level that you'd really like to see that support come in. And again, while there is, plenty of tech in the small cap space, there is a lot of other areas, financials, and places where it has that exposure that maybe the NASDAQ is missing. So it did have a strong day today, whereas the NASDAQ closed down.
And let's take a look at some of these pockets of strength, retail being one you mentioned, Justin. So Kohls, ticker KSS. Kind of hard to believe, at least for me personally, that department stores is the number 5 ranked industry group right now. But look at this move since November for Kohls. Nice pop today, up about 5.4%, slightly above average volume. And this is the kind of move that we like to see for swing trade setups.
Yeah, it feels like it wasn't that long ago where it was just like, our department store's dead. And, Kohls is kind of showing that, hey, look, I'm not dead yet, as Monty Python would say. And so what we really liked about this, and we put this on Swing Trader earlier today, we liked the bounce, the pullback, the bounce off the 50-day moving average line. And so that is an area where we've been looking for some of these bounces off of our moving averages, reversals. There's probably a better entry a couple weeks ago on that first bounce off the 50-day moving average line. That was kind of your well, yeah, either there or there, that you're pointing to. So either of those. But this is still doable. And again, the fact is that there's just a lot of strength there. And while the relative strength line isn't quite at new highs, it's pretty close to that. And so it's definitely one of those areas where it has been holding strength. And that's one of the things that we're really looking at right now, because it's been tough. It's been a little tougher out there lately.
Yeah. And the other tough thing I feel like with a lot of swing trade setups lately is we'll find something that's looking really good with earnings about a week away. So at least there's a little bit more time here with Kohls.
Well, and we had a lot of earnings come out last week. So, there's certainly a great number this week as well, but that's going to be the bulk of it. And so now we're going to be a little bit easier in terms of finding setups that don't have that looming earnings risk. So that should make things a little bit easier. But you have to wait and see what the market does, because you might think, okay, I've solved this problem, but sometimes other problems will come up. So we'll just have to wait and see how that plays out.
That's right. And then we also had Foot Locker added to swing trader kind of late in the session. So what was it about this one, Justin, that made you want to pull the trigger later in the day?
Well, so this is one that we were looking at in the morning, and granted, it's still retail, but very different, right? As opposed to a department store to retail apparel. And one of the things we were looking at is, hey, this is a breakout, and we've been having a little bit more trouble with breakouts. This still looked like a good setup, and what eventually kind of sealed the deal for us was we were just looking at a lot of these stocks that have been working, and it's the relative strength lines that were, one of the strong factors there. And so the reason why we went with this, we actually had taken Snap off because that wasn't working for us. And so we were looking for a replacement. And so we went with Foot Locker. And even though this is more of a breakout situation, we like that relative strength line. And so that's why we gave it a try. And again, retail was an area of strength today. So we're going to see if we can get a little bit out of that.
All right. And it looks like they haven't officially announced the earnings date, but we have a little bit of time for Foot Locker as well before it reports. Right. And now shifting, go ahead. Sorry, Justin.
No. I was just going to say I'm showing that it looks like the end of the month. I'm seeing that a conference call. It's going to be before the open on the 28th. Is what I'm showing.
So just hasn't made its way to Market Smith yet. So thank you for that, Justin. And now, shifting gears here a little bit, let's talk about uranium, ticker URA. Scott St. Clair of Market Smith and also a fellow IB Live panelist has been talking about this one along its run up in this ascending base here. And we're seeing a nice move today. And I don't know why this isn't going away. It was covering up the chart action, that little ascending base button there.
Swatted away like a fly.
Yeah, exactly. But anyway, URA saw a lot of strength today, Justin, and the move came in some nice volume. But it has to do with looking a little bit underneath the surface to uncover why.
So this is what I ended, when you asked me at the end of the IBD Live show today, just one more ticker, and I think I gave two, but URA was one of them. And one of the things I said is, hey, you have to make sure that whenever you're playing an ETF, you understand a little bit of what's underlying. What are the holdings? What are the weight in the holdings? And we had a real long discussion on the transportation averages today as well in terms of the ETFs and the holdings there. But for URA, another stock that we were looking at today was CCJ, and this is one of the uranium plays. And not to say that there weren't a lot of the metal plays that were working today. Steel, certainly, FCX and copper. Uranium is a metal too. So looking at CCJ, that was a 10% move today. It was looking very strong. We didn't put it on Swing Trader. We were looking at it very early on. We didn't put it on Swing Trader because it does have earnings coming up very shortly. And so, that's something we were aware of. And then as I was looking at URA, I did a quick search of, hey, what are the top holdings in URA? And CCJ is one of the top holdings. I think it's number 2, but the weight is pretty heavy, over 20% in this. So
wow.
Yes, you've got the diversity of a ETF in this case, but potentially a very heavy weight. and risk with that earnings coming.
Exactly.
Now, there certainly is the trend here, and this is what Scott Sinclair was kind of picking up on, is look, if people are getting a little bit more comfortable with nuclear energy, as a cleaner energy source, we've got the Japan disaster that we had. I mean, that's now 10 years back. Maybe people are kind of, getting a little bit more comfortable with, some of the safety precautions that they can put in there. So there is a play here, but you do have to be aware under the surface when you do have that earnings risk, because as we said, earnings are starting to taper off a little bit, after this week, but there is still that earnings risk out there, and you just have to be knowing what you've got.
So at this point, I mean, you wait for CCJ's earnings to get behind you and hope that URA is still within reach here. I guess it all kind of depends on how that earnings report goes, because other than that, it seems like the time to get into URA was in one of these prior pullbacks here in the
I mean, that certainly would have been my preference. But again, I guess my takeaway here is if you're gonna get into it and say, hey, I've got the diversity of an ETF, just know that you've got a lot of exposure to CCJ. And if that's fine with you and you size your position accordingly, for that large position in CCJ, then that's great. But I'd hate for anyone to go in there blindly and then get surprised.
Yeah, such a good point. Need to look at those underlying holdings and their weights, because 20%, that seems pretty significant for waiting for an ETF there.
It is. And, this is what we were talking about with the transportations today, too. I mean, there was a very big difference in the transportations because of the KSU weight in some, being very heavy and not in the others. So, yeah, always know your weights.
All right. Thanks so much for that, Justin. And thank you all for tuning in. The conversation, of course, is going to continue tomorrow morning on IBD Live. So we hope you tune in. Investors.com/IBD Live. We have a couple of special guests this week. We have special guests every week. So it's always a good time to tune in and get some fresh ideas. Investors.com/IBD Live for that. We'll see you there tomorrow morning, and we'll see you right back here tomorrow after the close.